January 22nd, 2025. I just wanted to go over the entries I took today. I don't want to make a full video today. I need to spend some time studying in other ways, but I really don't think I did a very good job today. I ended up break even on the day, but I definitely think I could have done better, especially over in this area. So, and also, my calibrated expectation, I just don't think I did a very good job managing calibrated expectations with my swing trades today. So anyways, I sold below AAT today. I thought, it's possibly three legs down on 17 or 16, up on 16, down on 17, up on 17, down on 18. And you're probably selling at least a second leg, one pullback, two. So I sold below 18 and I was basically hoping we were going to get a collapse on 19 and we didn't. And so probably the correct move is to just exit on the close of 19 and call it a day on that trade. But I decided to hold and I ended up getting out above 22 for a small loss. 21 is the third leg down. So we have the first leg down on 11, the second leg down to 19, and then the third leg down. It really just ends up being a wedge pullback. You could have bought the close of 6. I always mentioned the 4 bull bars. You could have bought the close of 6 and just held and gone for the measured move. That's a completely reasonable thing to do. And if you had done that, you would have made money. So that's a pretty solid trade. But I don't usually take that trade before bar 7. I usually just don't take any trades in general before bar 7, but it would have been reasonable to do that. There was also, I bought at the close of 24. I thought that was fine. I thought you can exit, I know bears exit above 22 since I was a bear and I exited above 22. So I thought that increased chance to go higher and then follow through 23, 24. 24 is climactic bar, so we might not go that much higher. We might pull back, but I did buy the close of 24. I pretty much held until we got once we got 44, I thought 44 was the last chance for the bulls. We hadn't gone below the moving average yet today, so it's really difficult to start to short. And then I ended up basically exiting below 43 during 46. And so I was basically break even on that trade, got out with, a literal couple of dollar loss. And then I did something not really great, and I bought the close of 51. I thought that there was a reasonable enough chance, 49, 50, 51, a reasonable enough chance that we go higher. Especially, but it's against a decently tight channel down and really just not worth taking. And this is one of those times where, that is my 4 bar system from 48 to 52, but probably makes more sense to just stay out of that necessarily than fade it. And that's part of learning, is learning when to stay out and when to fade. So I ended up buying up here and I got stopped out, and then I bought again because usually if you're not buying the close of this system and it's a better fade, it's also a better buy below because it is a trend line break. And so if we do get that lower low, we should try for at least one more leg up. This is also probably not going to turn into a bear trend. As big of a bear bar as 54 is, this is probably going to keep this from turning into a big bear trend. So I bought the low of 49 during, I believe, 58 with stop, the measure moved down, and I got out up here. And that trade, I lost a little bit more on the other trades than I made on this trade, but I took a larger position size on this trade, which is not a good idea, not something I would endorse doing. But I just don't think I did very well in that aspect today, and I got to work more on leg counting and really just trading against a tight channel and calibrated expectations within my trades. So I'm going to spend a lot of time tonight working on that, but I definitely could have done a better job today in a lot of aspects with my trading. And this is really going to be it for this video. I don't want to make a super long video today. Like I said, I got other things I have to study tonight. I'd rather just spend time and energy doing that. So that's it.